Well, let's take a look at the markets as the Johannesburg Stock Exchange is facing mixed sentiment today before the South African Reserve Bank announces its latest interest rate decision this afternoon with a hike expected. In Hong Kong, markets reopened after the Lunar New Year holiday. Makwe Masilela, Chief Investment Officer and founder at Makwe Fund Managers, joins us now for a market wrap. Mr. Masilela, good morning. Give us an update of how the markets are trading this morning after the JSE reversed gains yesterday.
Morning, Hugo. We opened up by almost 0.9%. Markets are excited, and all because yesterday we saw the Bank of Canada increasing interest rates, but being the first developed central banker to say that they might have to pause, so that itself increased the bets that the U.S. Federal Reserve will probably start to be less aggressive when it comes to rate hikes. And we know that the U.S. Central Bank happens to be a de facto leader. If they have to do that, then most probably other central banks will start to be less aggressive when it comes to their interest rate hikes. Hence, the market are excited this morning.
Well, it goes without saying that all eyes on the South African Reserve Bank's Monetary Policy Committee today as they table the latest interest decision.
Definitely, and it's a very important one because we know it's happening at a time where consumers are under pressure. We know that we've seen high electricity prices, and we know that our inflation, even though it managed to slow down, it's still at elevated levels. But for the fact that we've seen that last year, December, the U.S. Central Bank, they managed to be less aggressive, that is increasing by 0.5%, and for the fact that we have to maintain that interest rate differential, probably will do the same.
Now, in 2022, there were 3 consecutive 75 basis point hikes, the largest increase in 2 decades. With inflation seemingly calming, when should consumers expect some reprieve, if any?
The problem is here we have a situation where the global markets might be going down. We might have recession. We've seen some global economic data not looking that good. And we know that our mandate back home here is to deal with inflation. But given that the economy is not doing that great, most probably the central bank might start to pause before they even start thinking of reducing. So all I'm saying is that not any time 2023 that one can expect a decrease, but probably we can expect some pausing because of the struggling economy and the likes of load shedding gets to exacerbate the situation.
Now, Truworths has published a business update and voluntary trading statement for the 26-week period that ended at 1 January 2023. Help us make sense of that performance.
You know, this is the smallest compared to the likes of Mr. Price and the Fortune Group when you look at the market value, but it happens to have a PE which is not too demanding compared to the other two, and also a good dividend payer with a dividend yield of almost 7.9%. But given that we've already seen the numbers coming out of the Fortune Group and Mr. Price, it was not surprising to see some pedestrian sales growth when it comes to their retail sales, which were only up 13.7%. We know consumers are under pressure both here in South Africa and the UK. We know that load shedding had a very serious impact. And if you look into their account sales, they now contribute 52% of the group retail sales, and that has been up from 51%. And those account sales increased by 16.5%, with cash sales up only 10.8%. And the guys, they expect their profits as headline earnings per share to increase by a mere 11%.
Now, staying with numbers, Shana has also issued its annual financial results. What do those numbers look like?
Not too shabby, and I think the performance has been much stronger, and the guys, number one, benefited from higher demand. Number two, the weaker rand worked to their favor, and also the guys could also benefit or had the liberty to be able to increase prices, and the guys have enough inventory to be able to meet the strong demand which is anticipated. And if you look at their revenue, which is up 12%, all because of higher sales, all because of better pricing and also a weaker rand. And going forward, the guys, they expect that people will continue to demand low-cost protein usage, and canned fish continue to be one of those, and their profits as headline earnings per share is up 17%.
And that's our Market Watch for this morning. Appreciate your time, Makwe Masilela, Chief Investment Officer and founder at Makwe Fund Managers. You're watching